Welcome back, investors. Jake here. In this video, let's talk about two contrasting styles of investing and how they both have performed over the last 2 years, because I was actually myself shocked to read that Warren Buffett's Berkshire Hathaway over the last 2 years has outperformed Cathie Wood's ARK Innovation ETF. You could argue that Warren Buffett is the most well-known value investor currently in the market, and we'll just go ahead and label Cathie Wood as the poster child for growth investing today. And this article frames it basically as a tortoise versus the hare matchup, where the tortoise appears to be winning the race, at least since the pandemic started. If we look at this blue line, this is Cathie Wood's ARK Innovation ETF over the last 6 months, down 43%. Meanwhile, Berkshire Hathaway, Warren Buffett's holding company, is up 12.26%. We go to the 1-year performance. Berkshire is up 33.5%. Meanwhile, Cathie Wood is down 51%. It's only when you go back 2 years and you include Cathie Wood's fund performance from 2020 that it becomes competitive. It actually looks like a real race. However, Cathie Wood has underperformed, with Berkshire being up 37% and the ARK Innovation ETF fund only being up 30%. So if you potentially were buying ARK Innovation ETF before the pandemic hit, then you're only underperforming Berkshire by about 7%. And this comparison between these two funds, because Berkshire Hathaway is a holding company of different stocks and companies, is pretty amazing because you can see this green line, slow and steady, going up. Meanwhile, ARK Innovation ETF just got way ahead of itself. As it kept going up, people kept buying it simply because it was going up. And when I was watching this, guys, a year ago, people told me I was an idiot for picking individual stocks. All I had to do was put all my money into Cathie Wood's ARK fund and I'd be guaranteed 40%, 50%, 100% return on my money every year. Unfortunately, for most people, they weren't buying this fund 2 years ago, 3 years ago, or 5 years ago. They were buying it after it had gone up 140% in 2020. And for people doing that, they weren't considering valuation. They were giving into hype. If you want to go back a year and look at your favorite finance YouTubers, were they talking about Cathie Wood's ARK Innovation ETF? Were they promoting this fund after it had gone up 140%? Because if you believed in these companies that the fund held a year ago, then you should love the prices you're getting right now. In this video, we'll go through all of her holdings and see, are they still overvalued? Can this fund, Cathie Wood's fund, go lower? But the first thing I want to notify you guys is there's actually a short fund of Cathie Wood's fund. There's a company, let's see here, I think it's called Tuttle. The name of this ETF is the Tuttle Capital Short Innovation ETF, ticker symbol SARK, and it's just a short position on all of Cathie Wood's holdings. So we can look at the performance since this fund launched on November 10th, and this fund over 2 months is up 57%. So it's kind of tempting to jump into this and just try and ride down Cathie Wood's underperformance currently. And before we talk about her other holdings, I think we have to first quickly mention Tesla. The reason why her fund over the last 5 years has performed so well is because she invested early and heavily into Tesla when Tesla's market cap, I don't know, was maybe like 50 or 60 billion. And currently, Tesla's market cap is closer to $1 trillion. Does it give 941 billion? So without the vast overperformance of Tesla in her fund the last 5 years, she really would have had a very abysmal performance. So let's look at her other largest holdings, and you can find these on her website. Interestingly enough, she actually recently changed her website. It used to show her 1-year performance where she was down 40, 50%. She's since changed this to her 5-year annualized performance of 38%. But how many people were buying Cathie Wood's ARK Innovation ETF back in 2017? So if we scroll down and we look at her largest holdings, we already mentioned Tesla. And guys, once again, people want to know my opinion on Tesla. All you have to do is look at their price to earnings, 304, price to sales, 20, price to free cash flow, 95. By every measurable mathematical metric, this company is overvalued and the price can come down. The price could probably fall in half back down here to the 500 or 400 range. People don't like hearing this. When I talk about the potential that crypto or SPACs or IPOs or meme stocks, the price can go down, then people click out of my videos, they leave me a nasty comment, they don't want to hear that. They only want to hear that their investments are brilliant and that they're going to the moon, diamond hand forever, yada, yada, yada. So let's look at her largest holdings aside from Tesla. And she has Teledoc, Zoom, Roku, and Coinbase, all of these positions being above 5%. Are these good holdings currently? Can their performance continue to decline? Is ARK Innovation's ETF funds going to continue losing value? First company we're going to look at is Teledoc, and with all of these stock graphs, guys, they're going to look pretty similar in that 3 or 4 years ago, it was just a normal performance looking stock. However, once Cathie Wood added it to her fund and her fund started getting hyped, all of these stocks just shot up enormously, 400% basically in under 2 years. It peaked in February of 2021, and it's been a disaster holding this stock ever since, down 76% from its basically 52-week high. That is pretty amazing. And with all of these companies, guys, if it's below all 4 of its major moving averages, this is going to be a theme on my channel going forward. Look at the charts before taking a position. If a stock is below all 4 of its major moving averages, it's going to be very difficult for there to be a reversal based on the technicals, because most trading is done by computers and algorithms. And when a company, maybe on a good earnings report, finally does get some upside momentum, as soon as it hits one of these lines, it's likely to bounce off of it and trend back down. So until the 200-day moving average can catch up to the share price of the company, Teledoc's share price is probably going to continue going down, even if their fundamentals were solid. So let's look at their numbers and say, okay, so price to earnings doesn't exist because this company can't make a profit. Price to sales is 6.25. They don't have positive free cash flow. So how can a company that doesn't make a profit and doesn't have positive free cash flow stay in business? And they do that by diluting their shareholders. They do that by continuously issuing new stock, so the people who currently hold Teledoc will hold less of the company as the company continues to raise funding to basically stay in business. So is Teledoc going lower? Price to sales is the only thing we can evaluate it on. I think it is, based on the fundamentals and the technicals. Next up is Zoom. I use Zoom. It's a great service. Once again, from the start of the pandemic, this was the most obvious play, up 530%. There were people that made a lot of money. However, this peaked in October of 2020, and Zoom is down 74%. Holy cow. Once again, guys, these technicals are a nightmare, with Zoom being below all 4 of its major moving averages, stuck in a downtrend. Where is this going to go? It's going to go much lower than 140 a share. Looking at their fundamentals, P/E is 37. That's not terrible given the current pricing in the markets, but price to sales is 11.28. They are positive free cash flow, 25. I still think Zoom is probably going to go lower. If you were looking to buy this or get involved with Cathie Wood, I would wait until this was closer to $100 a share. Next stock is Roku. I like Roku. I set my parents up when I cut the cable with them with a Roku box. Shot up 500% in 2020, but from its peak, basically in July, it is down 68%. Once again, guys, the technicals are a nightmare with this stuck in a downtrend. Currently, Roku's at 147. Based on the technicals alone, this is probably going to go down to at least $100. And Roku, PDE is 71. Okay, price to sales, 8.5. They are, okay, so at least this company makes a profit. How rapidly are they growing? What are their future prospects with all this other competition in the streaming box arena with Amazon Fire Stick, Apple TV, so forth and so forth? It's a great service. I just don't think this is the innovative and disruptive, game-changing company that Cathie Wood markets it to be. Next company is Coinbase. This was a recent IPO. Geez, I think it was actually a direct listing, and it opened at $342, and it looks like it got back there as recently as November. However, it's down 47% from its high. Technicals, we don't even have a 200-day moving average because once again, this is an IPO, but it looks like it's stuck in a downtrend and it's going lower. Coinbase probably has the most decent fundamentals of all of these companies I've mentioned so far. PDE is 18, price to sales is 7. They are positive free cash flow at the moment. I would have to do more research, but maybe Coinbase of all of these is the most appealing at these prices, currently at 170. But what's the market cap? The bigger the market cap of these companies, guys, the harder it is basically for there to be a reversal disregarding the technicals. Market cap is 44 billion. I don't think this is going to recover anytime soon. So when we look at Cathie Wood's ARK Innovation ETF, it peaked at $156 per share. It's currently down 56%. Can it go lower? And yes, based on her largest holdings in her fund, obviously there's lots of smaller companies that could amazingly outperform and basically balance out the downtrend of these larger positions, but I just don't see how she's going to be able to fight the current headwinds with the Fed raising interest rates and people being skeptical of all these high growth stocks that are diluting their shareholders and they don't have profit yet. So do you want to get involved in this? You could either, with your broker, directly short ARK Innovation ETF, or you could just buy this reverse ETF from Tuttle Capital. I think it's hilarious that this is up 57% in 2 months. I guess I'm late to the party, or I could jump in on this now, and I don't know. It's tempting, guys. I'm curious what you think. If you guys have an opinion on Cathie Wood and the tortoise versus the hare, value investing versus hyper growth investing. I don't even want to call Cathie Wood's style of investing growth investing because she just makes very unusual picks. She had one good year, and we'll see. We'll see how the rest of this year plays out for her. If you guys like this video, give me a thumbs up so the algorithm knows it's good. Comments or questions, as always, love hearing from you guys. Till the next video, take care.